Lesson 9: Advanced Life Insurance Strategies, Useful Planning Tools or Expensive Distractions. Welcome back. So far, we have focused mainly on using life insurance to protect families from the financial effects of a premature death. That is still the most important use of life insurance, but it may also be used in advanced estate, business, tax, charitable, and wealth transfer strategies. You may hear terms such as ILIT, premium financing, buy-sell insurance, BOLI, split dollar planning, or be your own banker. These strategies can sound impressive. Some solve real financial problems. Others may add unnecessary cost, risk, and complexity. The key question is always, what specific problem is this strategy designed to solve? A business may purchase life insurance on an owner, executive, or employee whose death would cause a serious financial loss. This is called key person insurance. The business normally owns the policy, pays the premium, and receives the death benefit. The proceeds may help the company replace lost revenue, recruit and train a replacement, pay debts, maintain employee confidence, or keep the business operating during a difficult transition. The coverage should be based on the financial value of the person to the company, not simply their salary. Life insurance may also fund a buy-sell agreement. It explains what happens to an owner's business interest after death, disability, or retirement. If an owner dies, the life insurance proceeds may provide money to purchase that owner's share from the estate or surviving family. This may give the family cash, the surviving owner's control, and the company a better chance of continuing without conflict. The agreement, business valuation, policy ownership, and insurance amounts must all work together. A survivorship policy covers two people, often a married couple, and generally pays after the second person dies. Because the death benefit is not paid after the first death, this type of policy is usually not designed for basic income replacement. It may be used for estate liquidity, legacy planning, providing for a child with lifelong needs, or transferring wealth to the next generation. An irrevocable life insurance trust, often called an ILT, may own a life insurance policy. If the trust is properly designed and administered, the death benefit may be kept outside the insured person's taxable estate. The trustee receives the proceeds and follows the instructions. An ILET may help provide estate liquidity and protect proceeds for children. However, the trust is irrevocable. There may also be gift tax reporting, trustee duties, and attorney fees. It should solve a clear problem. Premium financing means borrowing money to pay large life insurance premiums. It's sometimes used by wealthy individuals, but there are serious risks. Interest rates may rise and the policy may perform below the illustration. It is not free insurance. You may also hear strategies called infinite banking, banking on yourself, or be your own banker. These involve purchasing a specially designed whole life policy, building cash value, and borrowing against it. But remember, you are not becoming a bank. You are borrowing from the insurance company using the policy as collateral. The loan charges interest, and unpaid loans reduce the death benefit. Compare this with simpler alternatives such as purchasing term life insurance, building emergency savings, or investing through a low-cost portfolio. Bank-owned life insurance, or BOLI, is life insurance purchased and owned by a bank. Other organizations may use corporate-owned life insurance, or COLI. Businesses may also consider split dollar arrangements, executive bonus plans, and life insurance for business succession. These are specialized tools. Life insurance may also support charitable goals. A charity may be named as the beneficiary, or in some cases, the owner of a policy. This may allow someone to create a future charitable gift that is larger than the amount they could give today. Always begin with the charitable goal. Before entering an advanced life insurance strategy, ask, what problem does this solve? Is the need real, permanent, and important? What assumptions must work? What could go wrong? And what is the simpler alternative? Complexity should earn its place in the plan. Now turn to the advanced strategy screening section of your workbook. For any strategy being recommended, record the problem, the owner, and the payer. record who receives the benefit, the major risks, and the professionals who should review it. Then compare it with at least one simpler alternative. Here is the main message. Advanced life insurance strategies should solve advanced problems. Do not confuse complexity with value. Key person and buy-sell protect a business. An ILET helps with estate liquidity. Banking strategies require careful comparison. Begin with the need. In our final lesson, we will bring everything together and create a practical process for comparing policies. You are almost at the finish line. I'll see you in lesson 10. Welcome to Robertson CFP. Let's build your future together.